Morning, everybody. How we all doing? I'll be a bit quiet this morning because there's probably some sore heads out there, isn't there? Morning, Steve, Mumo, Danny, JC, Evil, Monkey, Stenji, Church, Virginia, Paul, Gregors, Sean, Eri, Bogdan, Neo, George. Sure, I just said those two, didn't I? I don't know. Losing track. Morning, Franco. How we all doing? Everybody okay this morning? Won the first game. Finally. We couldn't beat Iceland, but we did manage to beat them. So it's good. Right. So, Monday. We got a big week this week. So we're going to have a look at the news this week, see what's coming up, have a look at what's happened over the weekend, news-wise. Not a lot, really. But, just get planned basically for all these interest rate changes this week and look at where we are with everything. So just going to go through all the pairs, have a look at what's going on, and usual stuff for Monday morning. So just kicking off with the weekend news. There's not an awful lot happened over the weekend. There's not a lot of talk from Japan. I was hoping to see a little bit more out of Japan this weekend with the moves from the yen, but nothing much exciting. So core machinery orders came out for Japan, which were up. But not a lot else really. So we're back at Friday afternoon already here, or Friday evening. So as you can see, that's basically the news for the weekend, and there's nothing really exciting at all in there. So nothing's happened over the weekend of impact. The week ahead today is quiet. We've got the Empire State Manufacturing Index at 130, which doesn't tend to do an awful lot. We do get some movement off of it sometimes, but it's not really a big leading indicator. So it all kicks off tomorrow morning with Aussie. So the Australian interest rate chain or interest rate release is coming out tomorrow morning at 5:30. This is the first big one of the week. No change forecast. There's no change forecast near future on the Australian dollar. So if we look at the fundamentals on the Aussie, 4.35 is current interest rate. It is fairly low compared to a lot of the other interest rates we've had. Their inflation is still at 3.6, although it is coming down nicely. So it's on its way to where it needs to be, but it's miles away from them being able to do an interest rate change on it at the moment. Same as the New Zealanders. We're at 5.5. It's sitting at 4. It's coming down fairly decent speed, but not enough anywhere near yet. So there's even talk of an increase on that. So tomorrow, I don't think we're going to get any shocks off of this, but it depends what they say in the statement and the press conference. So this is where we get the forward guidance moving forward. So hopefully we'll get some idea of when they're going to start to look at interest rate changes or what they've forecast for inflation for Australia. But at the moment, the Aussie pairs are all bullish compared to everything else, which is starting to reduce rates. So they're kind of longs at the minute, but the interest rates that are coming down we've seen from the CAD and from the Euro obviously haven't made a massive impact, have they, on FX? So difficult to call what's going to happen with that one, but that's our first rate of the week. Shouldn't be a change. Direction-wise, could go either way. Core retail sales and retail for US in the afternoon. And then we've got the CPI on Wednesday morning. So this is the big one Wednesday morning for us, for the UK. So inflation, they are forecasting we hit target. 2% is target. We're sitting at 2.3. So this is going to be kind of the pivotal news release this week for the pound, because if that comes out at target, this is the rate which the Bank of England have been watching to achieve, basically, so that they can start to drop interest rates. They've said that they weren't necessarily going to do it in June. They didn't say that I don't think they've ever said they're going to do it in June. July was when we thought, sort of got the first inkling that they may start to drop the rates, but obviously the rates are being changed on Wednesday. So the current forecast is unchanged. If that hits the 2%, which it's forecast to do, I think there's a chance that the Bank of England could go early under pressure from government, basically. Because it's an election year and the election's coming up on the 4th of July, there's a lot of pressure for the Conservatives to basically make a good impression, and obviously dropping your interest rates, dropping your mortgage, making everything work in that respect would be good. So we'll see what happens. If that comes out lower than 2%, I think there's a high probability we'll drop to 5%, because we're starting to overshoot the target, and we are very, very high, so that we're going to need to bring this down quick. So if this comes down below 2%, it means that we should have reduced our interest rates a little bit sooner, and there's a chance that we will have to start coming down in 0.5%, excuse me, 0.5% increments instead of 0.25% increments, reducing it quicker so we don't overshoot. But we will see. So these are going to be quite critical this week. Very difficult to see what the market will do. It's one of those things where you've just got to kind of wait and see. These are the types of news events that send you 300 ADR and we don't stop for months type thing. So we'll see what happens. As you can see, market started selling off on the pound on Friday quite hard. Well, staying quite hard. They started selling off, but not massively hard. Canadian was rallying last week, but so there's movement starting on the pound. It's pulling back again today at the moment, though. But so yeah, we'll see what happens. But it's a very, very, very difficult one to call this, because it'll be our first interest rate change for a year, and obviously it would be unforecast, which would have a massive impact on the FX numbers. So September was the last change that we had. And prior to that, it was the June where we kind of stopped. Everything sort of stopped back then. So unemployment claims are coming out on Thursday afternoon. We've also got on Thursday morning the SNB rate, 1.5. Look, there's no forecast because nobody's got a clue. They will do what they want to do. The Swiss, it's impossible to gauge it. You can see when you expand the Swissy, yeah, there's way more unexpected changes from the Swiss. They're always doing it. They just come out and go, yeah, we're going to go 1.25. Market panics, and all of a sudden you get a massive dump or a massive pump in the Swiss. So that's a lottery, total lottery. I think they'll probably stay. I don't know, actually. If you look at the Swiss numbers, I mean, we're at 1.4. We're stable with inflation. It's where they want it to be. Interest rates are low. Is there a reason for them to drop it? Probably not, but they can do what they like. So this one will be a bit of a shocker on possibly on Thursday, but we'll wait and see. So 1.5 is where we are. I suspect we'll get a 1.5 on that as well. Then into Friday, it's PMI day. So we've got retail sales on Friday morning for the pound, and then it's PMIs throughout the day. So the PMIs basically are another inflationary number, basically. So it's purchasing managers. It's basically the cost of raw materials, basically, for manufacturing. So if they go up, the cost that we pay for stuff goes up. If that goes up, inflation goes up. Yeah. So these are inflation-based figures. If they bounce, it's bullish. If they drop, it's bearish. So that's all on Friday. So it's a busy, busy, busy week. We've got 3 interest rates in 1 week, 2 on the same day, and obviously a key inflation figure. And it's more key than any other inflation figure because it's the 2% target that every country aims for. That is the forecast. So not achieving it and achieving it is a big thing. So a little bit bigger than normal, that one. So we'll wait and see. That's Wednesday morning. So today, very little news today. There's a good chance that the pound might move quite a bit this week, today and tomorrow, as the market tries to get itself positioned for where it needs to be. At the moment, I've got a hedge on the pound. I've got 1 short and 1 long. I've got the pound CAD on short at the moment. So I've got my target here for the pound CAD in this propulsion gap. So this is one that I've been scaling out on and taking some losses along the way. Got a nice profit on this last week, which I did some drawdown control with. That exit there is kind of a break even. I'm toying with the idea of moving this down in case we get a big sell-off. So I think I'm actually going to do that. So I'm just going to go for this low at the moment as a target to the downside. Haven't got, I've got 4 positions on that. Where's the other TP gone then? That one there. So basically got 4 positions on. I'm going to go for that low, which is ADR today, in the hope that the market continues this sell-off today, and that will just generate a nice little bit of profit rather than just take kind of a break even on the remainder of the position, because I've made a nice profit on it there, but it'll be a loss overall. It could hit this propulsion and they buy it back up again while they're holding it for the announcement. So we'll wait and see. But I'm hopeful that we might get a little bit of a drop in that this week. So that's the upcoming news. Other than that, it's just a case of keeping your eyes on what's going on with news-wise. So Aussie we've covered, Swiss we've covered, pound we've covered. So these are your main 3 this week. We're a bit light on US news until we get the PMIs. We've got unemployment claims and we've got retail. Retail is a lot less impacted at the moment than it has been. So we'll probably get some movement off of it, but the retail numbers, they're not anywhere near as important as what's going on with inflation and interest rates at the moment. So they've taken a little bit of a back seat. Unemployment claims still very important though. So we've got a big mover on Thursday potentially. So Thursday's the big one this week, and obviously Friday. So all back end news. The RSIs and ADRs, there's only the one today, which is Aussie New Zealand, which isn't actually an ADR. So if you look at the ADR there, it's basically because of this massive great gap down on the broker. So it's not really an ADR hit. If you look at where we closed, we've actually only moved half an ADR, so not really relevant today. However, we are very, very range bound at the moment on this. So we're approaching highs of the range, last week's high. So there's a good chance that we're going to find this previous support, which turns into resistance there before the drop, acting as, again, a resistance just to hold us in that position. We've got big propulsion gap targets to the upside, though. So again, the Aussie, obviously, we're not looking for the Australian dollar to change interest rates. So not really any reason for this to take off in either direction. However, when you look at what's happened with the New Zealand dollar, there was no change on the New Zealand dollar rate there. There was no change on the New Zealand dollar rate in these places either. So, you know, the market will do what the hell it wants at the moment. Very difficult situation for the Aussie with this one particularly, because we're bang in the middle of a range. So your guess is as good as mine. It could go either way, couldn't it, from there? So we'll see what happens with that one this week. But that is your only ADR today. There's a few RSI extensions on hourlies and 4 hourlies from all that movement that we had last week. A lot of it on the pound, as you can see. So pound CAD is extended to the downside. So that's extended and embedded down there. Obviously, I'm short on it at the moment, but it's an opportunity for longs as well. Come back up into that propulsion. And obviously, this is where we're expecting the market to buy if it wants to continue longs. But more likely, they're thinking, we're at least, if we don't drop interest rates this week, which is probable that we won't, you never know. If we don't drop them, there is a good chance that the Bank of England are going to come out and say we are going to drop them. Either way, it should be bullish for the pound this week. So pound Swiss also extended to the downside as well there. And you got the New Zealand dollar CAD on the hourly as well. So a big drop there on New Zealand dollar CAD. Got out of the short on that on Friday there, and then it completely collapsed after that. So yeah, good moves. We've got a nice weekly support coming up there as well. So I'm long on this now. So got out the short there, and obviously flip long because we got an RSI extension on the hourly. So long at the moment. We'll be taking another long if we can get back down to this support, which is last week's low. And you've got some 4 hour RSIs as well. Aussie dollar Swiss is extended on the 4 to the downside. Euro Swiss also extended. Big Swiss, this Swiss franc, basically all of this, the whole lot. So Aussie Swiss, Euro Swiss, Pound Swiss, New Zealand Swiss. Yeah, Swiss franc's been a crazy beast. So all of these good mean reversion opportunities long. I think I took one of these on the, yeah, so I've gone long CAD Swiss and US Swiss on the FTMO account. Just taking 2 exposures on that. So CAD Swiss was extended on Friday, not now. And yeah, US dollar Swiss as well. Wasn't quite extended, but I really like the US dollar Swiss down here. Look. So it's a double bottom off of last week's low. We've got a double bottom previous week's low. So really good area of support forming on this one. So yeah, like the look of that one as long as well. So yeah, lots of opportunities on RSI, but everything that we kind of had last week has sort of played itself out. So good week last week. Back up to minus 1.1 on the month, which is good considering I started the month 9% down pretty much in week 1. So nice recovery. Hopefully in the next week or so I can grab a 5% month out of it, but we'll see. We need some movement, which we are seeming to be getting at the moment. I just need to retarget this Euro US. That's tricky. I think I might just go for an ADR. See if we get an ADR out of it. Right, so that's it. So that's news this week. Twig, Bailey won't want to undershoot either. No. No, I mean, this is the trouble. I'm surprised that we've not had more out of Bailey. That was a, we really hit target pretty much on inflation, and we've got the second highest interest rates worldwide. So I'm surprised we haven't had more talk about moving this interest rate drop forward, which is why I'm thinking they may do a little bit of a shock move on it, but I don't know. It's undershooting is as bad as overshooting. So, if you overshoot and you start your inflation dropping too fast, it becomes difficult to run the country, basically. So this is why they need inflation. You need growth. You need stuff to be gradually going up so that you progress. It's not the end of the world. There are ways to obviously get inflation up very, very quickly, mainly through business, because businesses can just put prices up. But they don't want to do that because it stifles their growth. So it's difficult. It's a balancing act, a very difficult balancing act, which is why it's so important and why it drives currency, because this is what you're going to earn with your money in the bank. So where do you want to put your money and where don't you want to put your money? We know where we don't want to put our money at the moment, don't we? Bank of Japan. So, and the yen last week, obviously, we had that bit of a shock where we were expecting it to drop out, to pop out the top. It really tried on Friday, but they did not let it out, did they? So, still holding that second intervention level, that monthly high there. No movement on that. So we'll have a look at all the ends and everything in a sec. Morning, Callum. Grateful Buster. Do you know if you can open an FTMO account in a business name? I have no idea. I doubt it, because you are entering into a subcontractor agreement. And businesses can't really be subcontractors or employees. Basically, you're an employer, you're a contractor, but individual. I don't think you can open a business account. But a question for FTMO, not for me. I don't know. I wouldn't know. You might be able to. I mean, it's not really aimed at business, is it? If you're running any kind of financial business, you certainly don't need fake demo capital from a prop firm, do you? You want capital from investors, not fake money. Ismet, morning, Hennes. Yes, that's the question. Right. So we're going to go through all the FX pairs this morning. Have a look at everything, see where everything is. We'll start off with the ends, I think, because they're the obvious unknown at the moment. So all the yen pairs, basically, we are completely confused as to what the hell is going on with the yen. So the Friday we had the interest rate decision, which basically was no change. So we're a 0.1 basically on interest rates. So it's just stuck. The Bank of Japan on Friday said that they were planning on continued interest rate rises and lowering overseas bond purchases, basically, to try and bring more of the control of the yen into Japan, rather than having it all controlled by the US movement. And obviously, as you can see, market went, oh, really? Okay, not sure. Didn't get anywhere. So it was a non-starter Friday, which I'm not surprised about because they didn't do anything. Don't do anything, nothing changes. So New Zealand dollar yen, we had a little pop on that, and obviously we had a little drop back down again. We had a bit of a New Zealand dollar strength. Weakness rather. So yeah, everything basically just stalled on Friday with the yen. So with all these yen pairs at the moment, as you can see, looking longer term, where we started our interventions and our second intervention moves, most pairs are holding within this range at the moment. We've got the Aussies, which have pushed out the highs, but everything else is kind of, well, apart from the Swiss. But yeah, Aussies and the Swiss are the ones which have made the most progress and kind of undone the moves or exceeded them. Other than that, the yen is just sitting there neutral. No one's really touching it at the moment. And the US yen obviously is stuck because the US is not doing anything either. There's no bullishness, no bearishness. It's just neutral. So you've got a neutral currency which nobody knows what's anything's happening with, paired with a neutral currency because they won't tell us what they're going to do with their interest rates and when in any certainty. So the whole thing is stuck at the moment. I still no real directional bias on it, so I'm still staying out of it. I can't trade it because I just don't know what it's doing. I don't know how it's working. And as we know in FX, you can get currencies go wild for no reason whatsoever. Looking at the Swiss franc peg removal, things like that happen. At the moment, the Japanese are going through a complete shift in the way they control currency and how everything works over there, by changing their interest rates. So what impact's that going to have? How's it going to work? No idea. So if you don't know how anything's going to work, the only thing you can go off is technicals. So if you want to trade off technicals with any kind of system or strategy, not a problem. However, from a position trading perspective, where we are holding sort of longer term and scaling in and out of moves, this isn't moving in any rational sort of manner at the moment. So you don't know when you can get out of something. And the other problem with it is the swap fees are ridiculous. So if you short it, you just hemorrhage cash. So really the only option, I think, is longing everything against the yen. However, it's getting to the point where the Japanese turn around and do stupid intervention moves. So you don't want to be long it just in case they do another one, because if they do, you're dead. So it's just not on my radar at the moment at all, because I just can't see any way to really trade it. Stop loss based strategies, no problem, because obviously it's either going to hit a target or it's not going to hit a target. But as you can see, we spend the vast majority of our time just sitting around. So it's kind of sell the highs, buy the lows type thing if you can get to them. That's really all you can really do with the Japanese pairs at the moment. So you can use market structure, use reversal alerts, and just try and get in when you get a party taking control. So sellers take control, get in short term and get out. Get in and get out fast. It's really all you can do using risk reward at the moment, I think, on this one. But the moves are so erratic. It's just not worth really, I don't think, taking a risk on. So yeah, no idea on these yens. The bias is basically, obviously, we've got the US dollar is fairly neutral at the moment. The New Zealand dollar yen would be long. The Aussie dollar yen would be long. The Swiss franc, no clue. The pound and the euro shorts, and the CAD short as well. So the best trades from a fundamental perspective would be New Zealand dollar yen long and Aussie dollar yen long. But as you can see, not, you know, this thing here, when you got a pullback, yeah, you got an entry, a couple of entries long. This took nearly 2 weeks just to get back up there. And that was literally a day, sit around for 2 days, go into drawdown, come back, sit around for a couple of days, hit target. Not particularly fun trade to be in, is it? So yeah, it's just not much fun. The CAD obviously should really be more of a short bias because we're starting to drop those interest rates. Obviously, the Japanese are going to be increasing, but in 0.1 increments that you can't hardly see, which is pointless. So yeah, this one again, I'd probably say more like the US dollar sideways. So yen's just not interested at all. No real way I can see to trade them. The euro yen is a good short because, and so is probably the pound yen, assuming we do get that bearish move on the pound this week. So of all the pairs out there at the moment, this is probably the best opportunity for going short on this. But even then, I'm not sure you're going to get much more than that out of it. I don't know. So we'll see. So yen's not really sure. Mandy, yes, you can open an FTMO account as a business. All right, okay, there you go. There's your answer. You can. I don't really see the point in it, though. There's not much advantage to opening an FTMO account as a business, is there? Because there's no tax advantages. There is no tax benefits or anything like that. There's no VAT on what FTMO charges because they're not in the UK. I'm looking at it from a UK perspective, obviously, but anyway. Right, so we go through the Aussies. I find it interesting that your Discord has many people. Are they all making too much money to support your streams? I don't know. It's always confused me why there's nobody in the streams. There's 50 people in the streams. There's 5,000 people in the Telegram group. I don't know how many's in Discord, but I don't know. Those groups that I set up are not chat groups. I don't really encourage chat, as you probably know if you've been in there. It's more of a support group for the indicators and the strategies. But this is the best place, obviously, for support because I'm here. But I don't know. I think people watch the replays, but then again, my replays only get sort of 300 or 400 views. So, you know, I don't know. I don't know. I think they're just making too much money, Franco, as you say. So they're just basically just trading and making loads of money. They don't need to say anything, do you? If you're making money, you just keep quiet. Well, most people. Right, so Aussies. We'll start off with the Aussies. Big short on last week. I got out of the short on... When did I get out of that? Thursday. Day too early. Getting out fairly quick at the moment because of this market is so range bound. We've had two very big moves over the last week, which is lovely. Love to see the market actually starting to come back to life and some ADRs going in. So at the moment, it's almost a long opportunity on H1M5. Not quite. You've got propulsion gap target to the upside to aim for. You're just about to get a reversal alert on that hourly. So once the hourly candlestick, which is got 28 minutes on it, but you're just about to get a reversal alert on that this morning on the hourly. Look in there. So good chance of a push up into that area there. We're completely range bound at the moment, although the range is obviously changing size and shape on a regular basis at the minute. And especially now we've expanded that range to basically what the entire last month was over the last sort of week. So range lows coming up here, very, very strong support. This propulsion off of the news was added to multiple times. So market is trying to find new highs all the time. So we've got high, higher, high, higher, high. We're putting in higher lows. So the structure is moving up. This is a perfect long opportunity if they're going to continue to do that. So Canadian dollar dropping interest rates makes it more bearish. Aussie dollar not dropping interest rates, neutral to bullish. So the bias is kind of long, but obviously the market will take a long time to get anywhere because there's not really much interest at the moment because we are waiting for some guidance from the Aussies. So obviously tomorrow morning that could all change. So the rate is not going to change. I mean, it could change. Obviously, if it does change, then it will go like the clappers somewhere. But it's not forecast to change. We've got the statement coming out, which will give issue forward guidance, and then we've got the press conference. So they will say in the statement at the press conference, as they always do, we'd be driven by data, waiting for the CPI figures. But we haven't had any confirmation of when they're going to change interest rates at all, really. So tomorrow, if the Bank of Australia come out and say, or the Australian Central Bank come out and say, right, we're going to drop the interest rates in July or August, we'll probably see a big sell-off. If they say nothing, I suspect we'll remain bullish on it. So we'll have to wait and see. This week is very difficult, obviously, because you've got many direction-changing news events coming out this week. So anything you look at and go, oh, this looks like a good long now, all changes when the news comes out, as we know. So big propulsion moves on news tend to start things rolling in a direction. And also they will undo and come back here. So as we know from the Aussie New Zealand, yeah, we just move up and down all the time. Yeah. So we create propulsion gaps and then we come back and fill propulsion gaps. Yeah. So that's all it does. So Aussie CAD bias is more short than long, as you can see on the 4-hour chart, where we've been pushing quite nicely. We've had some good extensions, all of them given opportunities to get out. So yeah, it looks good for shorts at the moment. Tomorrow morning might look something different. Aussie dollar Swiss, again, Swissy I'm not in at the moment. I just don't, especially this week. Anything you're in with a Swiss this week, Thursday, you could be an absolute fortune or in hideous drawdown and flying away for weeks. We don't know. So the Swiss I'm just staying clear of at the moment because that unexpected interest rate change makes it too unpredictable. We've got too many world events going on at the moment as well that could make this just do whatever the hell it wants. It will just take off. As you can see there's a safe haven run. It will just take off. And if that safe haven run is warranted, it won't stop. So it's too tricky at the moment, which we know it always has been. But right now, loads of upside targets, and we've just completed the lowest downside propulsion gap. So we got actually no, so that's a lie. That is V-shaped recovery. So I would exclude those because that is one move on one day. That was a safe haven run. Oh no, it's not type move. So that isn't really a propulsion move. It's just an undoing of the previous move. So that's kind of the last little propulsion gap where we broke there. So it's all filled. So it looks like it wants to push up from here. And again, if the Aussies don't change their interest rates, it will make that bullish. If the Swiss don't change their interest rates, I'm not actually sure what the market's going to do. I don't really, you can't see, if you look at all the Swiss pairs, you can't really tell what the bias is on it. It's just all over the place, isn't it? It's been rallying like crazy, obviously, for the last week or so. But then everything's been weakening against it over the last week or so. So is this the Swiss strength or is this everything else selling off? Because we've had euro rate drop. We've got the pound possibly dropping its rate. Yeah, so it's very difficult to tell who's in control at the moment. So Aussie Swiss could go either way. You're approaching this area here, which is the previous support, which was the previous resistance area. Yeah, that you can ignore. So ADR, if we get an ADR to the downside today, that'd be a good looking long. It's already extended on the hourly, so you probably would have been in this from Friday anyway if you are trading Aussie Swiss. Aussie New Zealand, we've looked at already. So not really going anywhere. We're stuck bang in the middle of the range at the moment. So you could probably more likely come up here and sort that first, but it could just flag here. Yeah, and then just drop down into that propulsion there, long it out of that. But right now, H4, you're bang in the middle of nowhere. Last signal you had was to go long, which was back here. We didn't go anywhere. We pushed down, so you'd have been scaling in and you'd be out of that already. But I think there's a good chance you might get a lot more movement to the upside on that one, but we'll see. Aussie US H1 extension on Friday there. So got out of that one same day, which is nice. Sorry, not on Friday, on Tuesday, wasn't it? Wednesday on the news. So I got out of that on Thursday. So very easy to trade this at the moment, as you can see. So every RSI extension is just working out beautifully. Just flipping long and short, long and short, long and short. No signal at the moment, so not in anything at the minute. But again, US dollar at the moment is just an absolute dream. Anything you trade against the US at the moment, it's just doing that all the time. It's very hard to get stuck in anything US at the minute. So keep going either way. The chances are this will go bullish this week when we get the interest rate change, but we might get a shock. Yeah, so we just got to be wary of all news at the moment, and there's lots of it this week. So buying the lows, which would be lovely. Previous resistance. So yeah, it looks good for a push back up into there. And then obviously shorts somewhere up there. So as long as it moves quick, you're going to get RSI extensions, and every RSI extension at the moment is just playing out like clockwork. So really easy to trade. No signal on that at the moment though. CAD Swiss, again, Swiss franc, I'm not involved in at the minute, but we know the Swissies had a decent run and the CAD has dropped on the interest rates. Not as much as I was expecting it to. And same with the euro, not dropped anywhere near as much as I was expecting it to. But I think that's because the US is propping the CAD up still. So this could go either way. Much bigger propulsion targets to the upside if you look at the hourly as well. Yeah, we're full of areas of unfinished business up here. We've got this big support here that broke with that propulsion. So 50% retracement on this move into resistance. That propulsion gap along up into there is the obvious trade at the moment. Entry on Friday on that one down there. You also had an entry on it back here. So if you got into it back here, you've been holding it obviously for over a week and it's dropped. So you might not even have two trades on this. It's the ADR 41. Oh yeah, you'll probably have two trades on it. So averaged somewhere in here, the target up there. So, but obviously we need some movement on one of these two. And we've got no CAD news this week. We're very light on US news that's impactful that would also move the CAD. So we're looking for some moves off the Swissy. And there is a good chance that there's be a lot of Swiss franc movement this week, because if there is any shocks within news and the market doesn't know what to do, it will put the money into the Swiss because it's safe, and we'll get a rally on the Swiss franc, which would drive it down rather than up. So scaling into this one, obviously, you've got, where's the support coming up? I mean, we're at it. So that accumulation, previous support, yeah. So it's this propulsion gap basically is your support. So if it drops down through this, you're looking at this level here, which is 225 ADR. So you look for it to come down, and obviously you'll be even more extended on the 4 hour then. So, but you know, it's the Swiss franc. It will do what it likes, whenever it likes, in whichever direction it wants to do it. So that's why at the moment it's very, very, very hard, especially this week. Once this is out of the way, if we get little reaction to this, every time you get one of these interest rate changes, it buys you a month, basically. So, or it buys you a couple of weeks until the next CPI number at least. So, you know, when you get this Aussie rate, another 4.35 and another, we're not sure when the rates are changing, you know you've got another month where it's not really going to do anything. So you can look at what else is coming up and push and pull around it. So if they come out and say 4.35, yeah, looks like everything's going on target, we're going to drop it, you know you want to be bearish on it for the next month, or looking more for shorts than longs, because it's going to be harder for the market to rally it because they'll want to start scaling into some short positions. With the Swiss, once you get this out of the way this week and it comes out at 1.5 again, and as usual in the press conference they say We might not, which is basically all they ever do. You've got another month where the Swiss franc is just going to be pushed and pulled around on other people's news. So, it's the one currency which moves on everything. It's very hard to sort of trade it technically, because if you get to a beautiful technical support level and there's a news coming up on any currency, this will just do what it needs to do, because the market will push money into it and pull money out of it regarding what they want to do with the other currency. So it's kind of our in Forex, it's our holding bank. So we stick all our money in the Swiss, and then when we decide we want to invest in something, we'll pull it out the Swiss and put it in it. When we finish that investment, we'll stick it back in there and keep it safe. What we do, that's why it's called a safe haven. So again, CAD Swiss could go either way, much more upside potential there at the moment. We covered the yens. No idea. Euros. So we've had the rate drop. So euro rate drop has occurred, which we were expecting. We got the 0.25 drop, which is fantastic. This is why I'm saying about the pound potentially dropping. Look at where we are interest rate wise compared to euro. Look at where our inflation is compared to euro. They've already dropped it and it's lower. Ours is beating it and it's higher. There is every reason to drop this interest rate as fast as possible now. So with the euro dropping their rates and this having an ever such a slight bounce, what Lagarde, there was an update on the EA launcher, obviously. So what the Euro basically have said, or rather the ECB have said and Lagarde have said, is because this is still stubborn, we want to get ahead of the game, but we need to see this continuously coming down. So all the time, inflation is sitting around about a zero change, or ever so slightly higher than a zero change every month. What they will do is they will pause interest rate drops. If they see a big drop in inflation, they will drop rates. So this has changed from not when are we going to start to drop rates to a we are dropping rates to a normal situation, which we have in trading all the time. What are they doing with inflation? What's happening to inflation? If inflation goes up, you buy it. If inflation goes down, you sell it. So we're back in that situation now. So we're waiting for the next CPI number. We've had a drop. We got a very small bearish reaction. Yeah. So at the moment, I have got my EAs set short only on euro, apart from euro US and euro pound, because the pound is going to start to drop and the US dollar is very neutral at the moment. So I think with those two, you can trade in either direction. With everything else euro, I just want to be selling it because it's when that CPI number comes out, you can kiss it goodbye. If it's a negative or it's on target and the target is lower than last time, it's just going to drop. But it's not going to drop, I don't think, like that. Yeah, it's going to be very gradual. We're going to be very cautious on the way down. We're not going to put interest rates up by 0.25% every month like we did on the way up. That was an emergency reaction. This is a excellent, we're under control now. Let's gradually keep under control type move. So shorts at the moment on euro odd. But I want to be, you want to be up in these propulsion gaps. You want to be looking for resistance levels to the upside to short it. RSI extensions to the upside, ADR hits to the upside, anything to the upside, shorts for me personally. Euro CAD come down. So again, this one you can see I've had two shorts. So I've been shorting this for ages, but had two nice shorts in the last couple of weeks. RSI extensions to the upside. There was one there. Why did I take that one? Oh, that was off the news, wasn't it? So this was the euro and the CAD rates, basically. So when I saw that, I shorted it because we didn't go anywhere. And I was expecting it to drop. Another short there on the RSI extension, straight down. Yeah, so if we can push back up into resistance and get an RSI extension to the upside, lovely short. If you can get 125, 150 ADR hit to the upside, lovely short. Propulsion gaps, short. Resistance, short. Anything up, short for me. So this one, however, is a bear against a bear because the Canadians are also dropping interest rates. But again, as we saw, this was the interest rate change for euro and CAD. Yeah. What we were expecting was they've done it. Fantastic. Bang. Couple of ADR. What we got was opposite reaction. Meh. Opposite reaction. Meh. That's the interest rate change. It's just not doing anything. So overall bias is that way now. But don't expect it to come down fast. Euro Swiss. The Euro and the Swiss move together a lot of the time. So when you get some Euro news, you get the Swiss moving with it and vice versa. Obviously, as you can see here, we had some Swiss franc powering up. The Euro rate change. This thing's collapsed dramatically. If you were scaling into shorts on it, this is obviously the elevator shaft. So we climb up the stairs, we fall down the elevator shaft. Everything gets undone a lot faster than it gets done. So we're coming down now into a nice area of potential resistance, support resistance here. 125 ADR, which is that propulsion gap. So we'll see what happens. But yeah, longs much more undoing of the Swiss franc move, I think, is on the cards. However, obviously, really got short bias on this. So any move up into that propulsion area would be a good short. And then if it does want to push up further, you've got a beautiful monthly low, which got respected to the pip. And then you've got other areas where we had lovely support, which turned into resistance and support again. So you've got really strong areas, as you can see. It's the weekly, monthly levels. So I'd be looking for that. There's a lovely long right now. In fact, I think that's the one I took. Or did I? No, I took the CAD in the US. Yeah, because I was looking at the Euro, because I've got 2 Euro longs on at the moment. This is a totally different strategy. So it uses stop losses, so it doesn't matter if it's wrong. So yeah, pushing up into there and shorts when you get some kind of reversal on it. So again, when you get ADR hits to the upside in these sorts of areas, or you get RSI extensions, just drop down as usual, wait for the reversal alerts to go in, wait for the market to show you that you've got short players or long players on side, depending which way you're going. This one's obviously going nowhere at the moment. But yeah, so got big move to undo. So you can always stick your fib on it as well and look at where we're likely to pull back to. Yeah, so shallow pullback into the 38, medium pullback into the 50, deep pullback 61.8, 71.9, somewhere up here. Yeah. But obviously that is based on normal movement. Why can I never grab fibs? So we've got the Swiss franc rate coming out. If they change that rate, this is going to be different. So that's all happening this week. Euro pound longs on at the moment have had to scale out of some of this quite quick, because obviously we had the debacle in France with the government deciding they were giving up. But yeah, we gapped down on it basically. So I've had to take some drawdown control on it. I'm at break even on this at the moment. I'm undecided as to what to do with this. There's a gap fill play, obviously, and we've got the pound interest rates. So I'm kind of holding on to this week, trying to anyway. If we get a push back up into propulsion and we get close to an ADR today, I will take it off and be done with it and not play the gap fill. I think there's a good chance the gap fill will get done, because I think we're probably going to get weakness on the pound, which is obviously going to drive the euro pound up. But obviously that could be a very different result, couldn't it, this week? So at the moment, I'm roughly break even on the position, as in I can get out of it. Obviously, I've taken drawdown control, so the trade's a loss overall at the moment. But if we can get a push up into anywhere, basically what I'm going to be doing is watching this like a hawk. I'm going to have it up on my other monitor over here. I'm going to watch that high from 2 days ago. I'm going to watch that high from there, and I'm going to watch the high of last week, which is basically 100 to 125 ADR today. If we get any really strong selling action up there, I will probably exit. We've got to get there first, obviously. And as you can see at the moment, market structure is obviously bullish. So there's a chance of a lower high going in here and basically just continuing this market structure short. However, there is unfinished business with a gap. We very rarely get gaps these days in FX, and it's very rare that they do not get filled. However, this was a fundamental shift. So we had the euro changing their interest rates just as the French Parliament starts to sort of fracture. So it's the perfect storm of holy crapness. But is it an overreaction? I don't know. So we'll see. So longs on that one at the moment, obviously, because it was RSI extension here, just totally the wrong time to get in, obviously, because who could foresee what happened in France happening when you've got a technical? Yeah, this is how fundamentals trump technicals. Yeah, don't care what your system or strategy is. When they change direction on a currency, it means nothing. Yeah, got to be aware of what's going on in the world. So euro pound, I've got longs on at the moment. Overall, though, it could go either way. So this is the pair. I've got the EA on longs and shorts because we have dropped interest rates there. Lagarde has said that we're probably going to miss one, drop one, miss one, drop one, assuming everything happens nicely with CPI. The pound, we're just about to drop our interest rates because we're getting to inflation target. So that's a bear against a bear. A bear against a bear makes a range. Yeah, there's no bias long or short. It's just going to move up and down with the strongest currency at the time. So every news event is going to drive it up and down and up and down. The only downside you'll get is if you suddenly get a load of negative news on the euro and a load of positive news on the pound, this thing's going to come down a hell of a lot faster, and vice versa. So it should go either way, really. So I don't mind which direction to go into on that one. Euro New Zealand, as you can see, New Zealand bias is long at the moment. They're not changing interest rates down in a downward manner. They have said that they could possibly put it up another 0.25%. The euro obviously is dropping interest rates. Know where that wants to go, but down. So I'm waiting for extensions to the upside, RSI extensions upside, ADR hits to the upside for shorts. You got that one little spike there, it just slammed straight through it, but we've respected it twice to the upside. So again, support resistance. All the market does is it goes, can I sell? No, people want to buy it from here. Next time you get to it, are the people still wanting to buy it? No. And the people that were wanting to buy it flip short. Therefore, next time you get to the resistance, the short players that were long there hit it again and hit it again. That's how support resistance works. So if we get there, we know the market is short at the moment. The fundamentals are short at the moment. So looking for shorts. So ADR hit to the upside, RSI extensions to the upside. We'll be getting in. Same with Aussie as well. Yeah, so shorts on both of those. Euro US, again, I've got longs on this one at the moment. It's just sitting at break even. The US dollar is a mystery. The Fed have no idea what to do, when to do it. We've got the Trump thing going on. There's just so much going on. The market hasn't got any confidence in the US dollar at the moment, but it is the world's currency and it props itself up anyway. So this will go up and down a lot, as you can see. It's what it does all the time. So it doesn't matter which way you really trade the Euro US at the moment. It might get into some sticky situations where you get a big news event, unexpected CPI number mainly, but you know, it won't hold it because the Fed will not say what they're doing with interest rates with any degree of certainty. Everybody's speculating all the time on it, which is the problem with speculation is people listen to stuff, they do stuff, and then they look at it and go, nah. And it just undoes itself. So propulsions, yeah. So we've got a propulsion opportunity there. We've got the gap down, which got filled on the news. See, this is the difference. Yeah, we've got all these euro pairs with gap fills available. So did this one. But look what happened. We had some news on the US. Yeah, so this is always going to move on everything. So up or down doesn't really matter too much. As long as it moves, you make money. So usual stuff. Shorts there, longs there, shorts. Yeah, what's on there? So RSI extensions, ADR hits to the upside, downside, just opposites basically. Any mean reversion. Pound odd. So again, all these pounds. So this is the pound is the one this week which we look at and go, right now, I suspect, but confirmation. We need to wait and see what happens on Thursday. So we will be keeping the rates at the moment, as far as we know. However, we may not be, because we got CPI coming out on Wednesday. So this one is going to move on Wednesday, and then it's going to move on Thursday. The differential away from 2% will decide how much we move on Wednesday. If we get the 2%, which is what the market is forecasting, we'll probably get a bit of movement. And more likely, a nice bear move. If we get anything lower than that, the market will sell off dramatically, because they will be pressuring this to drop. So if this rate does not drop on Thursday, these numbers will not be as forecast, because if that happens, it will sway some of the board to want to drop rates. However, there won't be a majority, so these numbers will come out bearish, even if that doesn't drop. So this is why I'm pretty bearish on the pound this week. So yeah, shorts. I'm at the point now, as with the euro, where I'm almost ready to turn the EA short only, but we haven't had a confirmation yet, and we haven't had an interest rate change yet. So we want to be shorting everything against the Aussie and the New Zealand at the moment, long term. As you can see, obviously, the structure is bearish at the moment. Yeah, so we're just coming down very nicely. And that's what we should continue to do. So you could really trade this in either direction. If you go long, it's going to take you a little bit longer to get out of the trades. Whereas if you go short, they play out a lot faster. So it's nicer, but I don't think there's any problem with actually going that way either, really, on the pound, because I do not think we're going to come down, drop, in the same way as the euro are not going to do the same. So I think we're going to come down gradually, which means you just want a bearish stance on it over the coming X months. So shorts on that. Pound CAD, RSI extension. I'm just going to do the pound CAD. Thank you for that. So you had a short there. You had a short there. You had a long there. So, I mean, you can kind of get in, but the longs you want to get out faster with lower targets, basically. Just get out, because there's a good chance it's going to turn faster. So pound CAD, that's just an ADR hit to the downside. So I'm short on this already. So we are still embedded down here. Yeah. So, yeah, should come down really, which is why I've extended my targets on this one today, just down into these lows. My exit was going to be at a break even in this propulsion, and I will still be watching this. We haven't got to where I would look at a bounce, which is somewhere around there, somewhere on these highs. If it's going to bounce, it is a good chance we'll just get an hourly candle that blows through it, though, on its way down to test the lows from the 2-week and 3-week lows. So that's kind of the play at the moment. Technically, it's a long, obviously, but I'm already in it short. So for me, it's a short. And this is why why different people are going to get completely different results with position trading strategies, specifically the ones that I give you on RSI. If I'm in a short when there's a long trigger, I'm not going to get in that long. So it could collapse. I get out my short, and you'll be going, hang on a minute, I'm in 4 longs. Why is he not in those longs? Because I was in a trade before you. And, same things with these prop evaluations. If you start the prop evaluation on that day, you're going to get a totally different portfolio if you start the evaluation on that day, because the market is doing different things on different things. So you're never going to be in the same trades as anybody else with the same product. Yeah, if everybody's using the position trader EA set up exactly the same as mine, the day that you start it will determine whether or not you get the same trades as me. It's just not going to happen, is it? So right now it's a technical long, and it's a beautiful one out of a propulsion gap. However, it's a fundamental short against a short. So it could go either way. Yeah, we don't know, do we? But what I would like is an ADR hit today so that I can get out of it and then sit there and wait until the rate comes out and then deal with something new next week. So as I said, I'm on the verge of going short only on the EA, but not quite. I want to see really what happens with CPI on Wednesday. That will tell me whether or not I need to. If that comes out at a 2 or a 1.9, for example, definitely don't want to be long in it. So waiting for that number, basically, and I might make the decision on Wednesday. Pound Swiss, again, Swiss franc rallying, pound dropping. we've got a lovely support potentially coming up. That's the intervention. Not the intervention, this little quick safe haven run we had. That is the actual sort of accumulation support we probably would have hit, which we're at the moment. You've got a whacking great sell-off there, which they will want to correct. So we should get a little pullback on this one, potentially, but it's going to need the Swiss franc to weaken. Could be the pound strengthens this week for a couple of days before we get the CPI number, and they drop it from there. But yeah, so it's nice looking long. You've just had a retest of the reversal alert there. Watch this low from the previous week, which is an ADR hit to the upside. So nice looking long opportunity today. Just about to get a reversal alert on this drop pre-market. 15-minute you had it, but that was on a gap, so it's not very good. Yeah, looks good for a quick long from where it is, but market might sell the crap out of the pound today. Remember, we might be selling into that CPI number, because that CPI number is forecast to be dropping, so the market is expecting CPI to drop. If they get what they expect, they will want to be short on it. They may well start to do that this week, Monday, Tuesday. Franco, I feel summer may not be dead. Just too much going on in the world. Yeah. Maybe. Yeah. Summer trading. This is the thing that worries me about this year. Summer trading is going to be contracted. Always is. We've got contracted trading conditions at the moment. When you go into summer, it gets more contracted than contracted. Basically, it's flatlined. So it's going to be an interesting summer. But there's a lot going on. We've got elections. We've got changes in different parties throughout the world. We've got world moving more right-wing than left-wing. We've got wars going on. There's all sorts of stuff that could liven this summer up, isn't there? But you never know. We'll have to wait and see. Pound New Zealand. So bias on this one is definitely a short, because the New Zealanders are potentially saying they may increase interest rates, although I doubt they will. And the pound obviously is going to need to drop them. So whether we get back to that propulsion move or not convinced. So it's going to be quite hard for them to drive back up there if that CPI number comes out negative and we get a vote change for a drop, or we get the press conference saying we're getting a drop, or in fact we get a drop. Yeah, it's never getting back there. Yeah, well, it will at some point in the future, but not short term, is it? So shorts only for me. Had a little long there last week, which got out of. As you can see, this is what I mean about getting out of trades fast. Yeah, in, out, same day. I want to be out of this stuff if I'm longing it quick. Don't mind taking the odd scalp long, but you want to be out of it. So if you get an entry and you look at your P&L and you go, oh, the EA's taken me long on the pound and it's in profit, 0.25%, happy with that. Might get more. Fine, but I'd rather be out with a small profit than stuck in this thing against the fundamentals. So, but we will see. You know, if Paley comes out this week and says we have just about hit the inflation target, but we're forecasting a 1% pop because of this, and this, it's going to go through the roof. Yeah, we just don't know. This is why we have press conferences, so they can tell us what the hell's going on, so we know what to do. Or what we should be doing, what the market should be doing in a normal situation. But yeah, but at the moment, obviously, very bearish. So I'd be looking for shorts, ideally, off of the RSI extensions and IEDRs to the upside. As I say, whether it gets back to that or not, difficult. We'll wait and see. Pound US, this one is a kind of both direction instrument for me at the moment, same as the Euro US is. So at the moment I've got a long on it. Obviously this might get me into a bit of DD this week. So weak US dollar, and this is the beauty of trading obviously the US dollar. If the pound is going to remain weak this week because they're selling the pound into CPI, they could sell a hell of a lot more US dollar on a bad news event. You could be up there even though the pound is weak. Yeah, so you know, there's still an opportunity to long everything against the US dollar, because when that Fed comes out and says Excellent. CPI's dropped. We're going to drop it, guys. The dollar's going to collapse on its backside. Yeah, and everything's going to rally against it. It doesn't matter if it's the weakest currency on the planet, like the euro may become. If it starts dropping rates quickly, the US will become weaker because it's the biggest currency. It moves the most. It moves the furthest. It's more affected by news than anything else. Look at that. Non-farm payroll, unemployment rate change. No, don't worry about it. It's like 200 ADR. Nah. Yeah. Huge propulsion moves, huge news moves. You're always going to get it undoing them because the market overreacts. It's scared all the time at the moment, especially in the US. So we got this accumulation here, which we broke from. That was our price discovery move. We discovered we could transact up here, but we're probably going to find ourselves coming back down and retesting this area at some point. So you're looking at sort of 225, 250 ADR from where we are at the moment. If we get that negative news coming in and the market decides to take it negative. Don't forget, we've had interest rates dropping and positive moves on currencies recently. We've had no change in currency interest rates and things collapsing 200, 300 ADR. Yeah, this is not normal at the moment. This market is not doing what it has happily done on fundamentals for decades because we're just not in the same situation at the moment. Everybody's poor, everybody's scared, and everybody's doing things that they need to do. So this is just banks executing orders. Don't forget, at the end of the day, if the banks need to get out of some stuff, they'll get out of some stuff, which is why we see these big moves and then they can get undone. They're just using the liquidity to execute positions and getting back out. So Pandurus will want to be flipping ideally more short than long, but it will probably be able to be trading in both directions until that US turns around and says, we're going to do something different with interest rates, or Trump gets back into power, or there's a civil war because Trump didn't get into power or something. Yeah. All that could happen, as Franco's just said. It's not a normal situation. This summer, all sorts of stuff could happen. New Zealand dollar CAD. So at the moment, the bias on this one is a long, really. As you can see, I had to scale out of a lot of this move. Got caught the wrong side of it on news. Was not expecting the New Zealand dollar to power up like a crazy thing because the interest rates didn't change. Yeah. In the same way as before, we weren't expecting the New Zealand dollar to collapse because the interest rates didn't change. So I was back there, wasn't it? There. So it's just at the moment, you're fundamentally looking more long than short because the New Zealand dollar isn't dropping interest rates and the CAD is. So in theory, yes, we should be doing all of this. But it's hopefully going to start to move more in a structured manner like that rather than this, which is what we've had, isn't it? Just sideways for months on end, which means you are just stuck for months on end. So hopefully we are starting to get back into some more structure. The market volatility in the last sort of month or so has really expanded, as you can see on the chart here. Yeah, we're getting some big sweeping moves rather than these little tight things at the minute because we now have much more of an idea what's happening with interest rates. So there's a little bit more confidence coming into the market. So at the moment I've got long on it, which was the H1 here. ADR on Aussie New Zealand, that's not really an ADR. That's one we looked at earlier. It's not because we had a massive gap down. But that's my broker anyway. Yours would probably be different. So yeah, looking for a push up into propulsion, or actually probably a test of the highs. Got TP on that yet. So somewhere up there is a nice conservative high. But if market structure is going to continue, we should be looking for it to continue to make new highs. So that low there basically from last week, ideally, if we're going to continue market structure long, should stay intact. Failing that, we've got a double bottom weekly here, which is that previous high, yeah, which is 150 ADR. So my next long is going to be if we come and test this area here. And then if that fails, be looking for another entry there. So be in 3 positions. Average will be somewhere around about there. And if we decide to form a range on the way, just get out when it pushes up. there's a lot of downside targets on this, but obviously the fundamentals have now shifted on this one. New Zealanders have said we're definitely not going to change our interest rates. There is a possibility of maybe 0.25% if it still keeps on going wrong. The Canadians have dropped it. So it's fundamentally, it's a long bias. Technically, it's a long. Yeah, so just long in at the moment. New Zealand Swiss, again, very difficult to call because the New Zealand is a long and the Swiss is whatever it wants to be. So right now, this could go either way. You've got, forget that spike again. Yeah, that is the low. We broke out that high there, propulsion move. That's that propulsion gap there. Tested, tested, tested. Yeah, so we know they're buying this level, which is 150 ADR. So right now it's a long. You had an opportunity to long it there. You had an opportunity to long it there. You had an opportunity to long it there. You've got an opportunity to long it now. Yeah. If it comes down, we should find support there. So if it collapses down here without pulling back and giving you an out, you'll be in a couple of positions down there. So yeah, looks good for longs at the moment. Technically, it is really a long, but do you want to really be taking any Swiss franc trades on the week? The Swiss franc are doing something unknown with their interest rates. Just gamble. You could find yourself up there this week. You could find yourself down here. No idea. So just be careful with anything Swissy this week, because obviously the news is coming out on Thursday morning, and that could be a absolute shock. Again, if that comes out at 1.25, the expected move would be a really big sell-off, 200, 300 ADR. What we have seen is ridiculous spikes in the opposite direction. So just, you know, be wary of the Swiss. It can get you into trouble. And that's the rest of the New Zealand. Oh, yeah, New Zealand, US. So longs on this one at the moment. Again, need to put a target on that. Very much the same as the New Zealand dollar CAD. Looking for that high, that propulsion gap to the upside. We are making new highs. Higher highs, higher lows. Perfect market structure. Sorry. Continue. But obviously news on the US will just make it do whatever it wants to in a ridiculously large move. So if it's in your direction, happy days. If it's not, scaling in. We've got two supports coming up. We've got an accumulation here, and we've got these lows here. So good support at ADR today. That's where my next long will be, which is roughly about the week's low as well. But like it long. And the US dollar CAD. So this is my dream at the moment. It's just a money-making machine. It doesn't matter what happens. You just take every RSI extension and it just pays. And there's no reason for it to change, really. US CAD moves together, both driven by oil. Oil prices will affect them both equally. The bias on it is a short and a neutral, going to go short at some time, but could go anywhere on news type thing. So as long as there is that US dollar, there is ridiculous movement for no reason, which will just get undone because there's no reason. So every propulsion gap you see on the chart just gets filled. Yeah. So we're filling, we got just made new propulsion to the upside there. We've got downside targets there, downside targets there, and downside targets there. So at the moment, there's no trades on it, but whatever news comes out this week gives us our first RSI. Just going to go the opposite direction. So just waiting for mean reversion. Reversal alerts, as you can see on this, we're getting this all the time at the moment. You get reversal alert followed by a reversal alert roughly in the same spot because the market is just doing that. So we get signs of strength and then that's just it. And then we get signs of weakness, signs of strength. So reversal alerts at the moment on this, you're going to find you're going to get a load side by side all the time because it's just flip-flopping. Big V-shaped recovery on non-farm payroll. You know, it's just undoing everything. It's beautiful. So just waiting for an opportunity. So RSI extensions and ADR hits to the upside and the downside. So ADR to the downside is weekly support. ADR to the upside is weekly resistance. They will probably trigger an RSI because it moves quick. So relative strength in one direction takes you extended very quickly. So either way on that. US dollar Swiss. Again, undone all the news. It's just undoing itself all the time. This is this horrible news stuck thing that we've got going on at the moment. So if you get into something and the news goes against you and you get stuck, you just end up sitting in drawdown for weeks on end. And the Swissy is just doing this all the time. It's a pain in the ass. Always has been, but it's become more prominent now that it's a pain, basically. So we're sitting in propulsion at the moment from that news, which is holding. So if that is going to continue to hold and the market doesn't want to let this go past this kind of 89 round number, pretty much is what we're batting off at the moment. Yeah, so that's the 89 round number. Yeah, we're just holding this at the minute. And obviously we've traded up to 92-ish. So that's our range at the moment, 89 to 92. So could easily push itself back up to there on US dollar strength. If we get US dollar weakness, it's likely to get bought up, I think. So, but if it does drop, you're looking at quite a long drop down, 250 ADR or so, before you're going to hit any kind of support on this. That level there could obviously come into play as well, which is about 200 ADR-ish. So could go either way. But again, it's the Swiss. I'm just not confident enough on anything Swiss at the moment with what they are doing with their interest rates. Yeah, it always worries me when someone just goes, hey, we changed our mind. You can't just change your mind. It upsets the market. When the market gets upset, it stays upset for ages. So you just don't want to trade anything risky at the moment. It's too risky. Everything's too risky. So yens and Swissies are just temporarily off the radar until we've got some sense of normality. Somebody asked me, not over the weekend, it was late last week, when will we get back to normal? What was something along those lines? They said, I can't remember exactly what the question was. But I keep going on about how I used to trade like pound New Zealand at 450 ADR and 350 ADR, and we're sitting at 100 ADR at the moment. Yeah, the market contraction is a quarter of what it was before COVID. Since COVID, we've had the shock of COVID, being in COVID, the expansion, the collapse in the stock market. We've had the interest rate rally, the interest rate freeze, and now going through the interest rate drop. We've had this cycle of, since COVID started, and this is 4 years ago now, yeah, of what the hell? We got hit by a sledgehammer in all markets, got hit by a sledgehammer. And we've gone through the holy crap, this has cost us a fortune phase, to the, okay, I think we've got this under control phase, to the hopefully returning back to normal phase. That is when I think we're going to be back to what we used to experience as trading conditions sort of 4 years ago, pre-COVID. Everything was lovely and normal. However, I can't complain. For the last 3 years, absolutely no problem trading. Position trading has been brilliant because the market has been moving a lot. It's just everything's got very contracted in the last year. So I think once we start getting these interest rates coming down, this was my answer in a long-winded way, everybody starts to reduce those interest rates. I think we'll just get normal market structure movement. I still think those ATRs will be contracted. I think we will be looking at ADR levels being lower than normal. But, as long as there is banks, there is a need to make money and transact, these markets will move up and down. The fundamentals at the moment are just stagnant. I talk about stagnation a lot when I'm talking about backtesting and strategy stagnating. We are going through a stagnation period at the moment. Well, I certainly am anyway. So it's just one of those things you have to sit through. You can't control what this thing does, and you can't control how it moves. All you can do is extract money from the movement. And I think you just got to be a little bit more risk averse at the moment, which is why I'm not having the best year this year, because I've got out of stuff quick because I haven't wanted to hold anything. It's scary at the moment. So, and the Swissy is part of that, in the fact that I've got burnt on it, and we've got these interest rate changes coming out of the blue at us with absolutely, and this is why there's never a forecast. It's just impossible to say what they're going to do. So, it's just we're stuck at the moment, not knowing what's going to happen with that, and specifically the yen. There's plenty of other FX pairs out there without them. Yeah, there's still opportunities on everything else. Everything else is moving a lot more normally, isn't it? But then everything else always has. And again, before COVID, the yen and the Swiss were volatile and crazy. That hasn't changed. Yeah, except now we've got the true colours of countries like Japan showing in the fact that they are really financially struggling because the cost of COVID is becoming clear, isn't it? That's why the S&P collapsed. Yeah, the stock market was rallying like crazy throughout 2020 after COVID, and all businesses were shut. No one was making money. Share prices weren't really going up. Businesses were not becoming bigger and more profitable. What was happening was the stock market was being artificially inflated, and then we had to collapse it because everyone went, Amazon's not worth that. Peloton's not worth that. Peloton's a prime example of why it all went wrong. Yeah. Going to lockdown. We can't go to the gym. Okay, I need an exercise bike. Peloton's shares go through the roof because they cannot manufacture them fast enough. Oh, the gyms are open again. I'm selling a Peloton. There's 1 billion bikes on the market, half the price Peloton sell them. No one wants to buy them. Collapse. Yeah. Just the normal way of things. It's just, we've never been through that before, have we? So normality will come back. Normal market structure is starting. I can see it starting to get back to normal, but we are still getting these stagnation periods, which are lasting a lot longer than normal. So when interest rate differentials happen, and this is the whole purpose behind the buyer scorecard, is to show you what the fundamentals are saying should be the normal movement of price. And the fundamentals, it loads, haven't been the same, have they? But these biases will start to return now. The pound against the CAD. Yeah, Canadians have dropped interest rates. The pound hasn't. The pound interest rate is massive. The Canadians is now getting smaller. Yeah, so the right now, today, that is what you should be doing. But we know it's changing in 3 days. So, this is like any other indicator. It is going to lag fundamentals, and fundamentals, you're talking 2-4 week intervals. This is lagging indicator. This is the current fundamentals, which will change. And this is the problem with using this. I get asked all the time in Telegram, how do you trade this? You don't trade it. Think of it like a moving average. Yeah. At the moment, pound CAD, is above the moving average. You want to be buying it, right? But the problem with moving average trading is I'm only going to take longs because we're way above the 200 moving average. When it comes down for 4 weeks, hits that moving average, you've been longing it only, you're dead, because this thing's lagging 200 days. It's telling you what's the average of the last 200 days. That's got nothing to do with today. On Thursday, when that interest rate drops unexpectedly on the pound, if it does, you think that 200 moving average is going to hold that up? What was happening with this thing over the last 200 days has got nothing to do with Thursday. Thursday's different. So this is just a directional thing, but a lot less useful at the moment because COT positioning as well, a lot less useful. COT is not changing. Very, 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 very rare changes on COT at the moment. Market's just stuck, positioned where it's positioned, and it's not really moving a lot. There's no reason to. Yeah. If interest rates aren't going to change for 12 months, what's your bias? Same as it was last June, because that's when we last changed it. It hasn't changed since then. So what it was then. Yeah, stuff's just not moving. This is the only thing that moves on a daily basis, retail. Going long and short constantly in the wrong direction. But anyway, so yeah, we will get back to some normality hopefully soon. I think we need to get this summer out of the way, get these interest rate drops started, and then hopefully we'll pick up towards the end of this year and it'll become normal again. And our friend US dollar yen is the last one, obviously, which is mystery. Morning, Harold. I've been scanning credit markets, 5 trillion in credit card debt, real estate defaults, ballooning, bubble warnings. Yeah. Retailers closing outlets. So that's why the summer will be action filled. Yeah. No one knows the damage done in China during COVID. No. Never hear anything out of China, do we? They know everything about us because they're tapping our phones. Conspiracy theorists. But yeah. Morning, Peter. So yeah, I mean, this is the thing. We've got the people always talk about crashes in the markets. You know, with all the financial crash, the banking crash, the banking crisis, that there's always something bubbling, because the way that the world works is something has to go wrong for something to be corrected all the time. So there's always something that is wrong. And that's it, basically. So whenever you get out of the thing that was wrong last time, the next thing goes wrong. And then something else affects it, which is why it's impossible to use any strategy really that reliably all the time, because the markets are never the same, ever the same. But we've got also in the UK, it was on the news this morning. I mean, it sounds like a stupid thing to say, but there are roughly 80 pubs in the UK shutting. I think it was every week or every month, but it doesn't matter whether it's weekly or monthly. Yeah, there's 80 a period shutting. That's a lot of businesses that are going to the wall. The reason is because we can't afford to go to the pub anymore, because inflation has driven the price of what we buy in the pub up. Our wages have gone down or stayed the same. Therefore, we can't buy it. So they shut. As they shut, it puts less money into the government because they're not getting that tax revenue, which means they need to tax us more. And it's this whole inflation spiral that we're all trying to get out of, which is causing another problem. I can't afford my mortgage anymore. So then you have this housing bubble where people suddenly collapse and have to sell their houses, which drives the housing market down, yeah, which causes another problem. And there's always a problem being created by a problem. When you fix the problem, the next problem has to explode. And that's just the cycle of everything. So, you know, this is why we have, you'll see in financial juice flying past every now and again, these fear and greed meters. And this is the market having confidence and no confidence in what the hell's coming up next. Yeah. At the moment, we're in fear. Yeah. So, it's, you know, you look at the impact. If you had a historical fear and greed meter on what happens to the stock markets, yeah, the market structure on the stock markets is in line with, shall we buy stocks because they're risky? Yes, let's buy stocks because they're risky. Yeah. We're going to make loads of money because we've got loads of money. Oh, we haven't got much money. We're not going to make lots of money. Yeah, it's just what happens. Sheep. Nice name for your sheep. Lambo the sheep. I like that. Harold's just bought his first Lambo. Is it one of those, Harold? Is that your Lambo you bought? Good Lambo. Not my Lambo. But yeah, anyway, we'll see. So, we'll see what happens this week with obviously all the news coming up. It's going to be a pretty interesting one. So today we will or won't see movement based on whether or not the market is positioned correctly for what's coming up. So I suspect it's too late for them to make any moves on the Aussie pairs, but today we've got no news. So it's not unusual ahead of interest rate days for you to suddenly get big movements in one direction or the other as the market just gets itself ready. So they will position themselves how they want to be positioned based on what their analysts have told them is the likely outcome of that. Don't forget, all the banks are also gambling on all of this. Yeah, the Bank of England will tell us and the banks will react. So you will see the markets generally either rotating on a week like this until we get the news, or correcting themselves into what they think is going to happen. So if the market suddenly shorts massively on the pound, they are expecting it to drop. If it sits around, they have either already factored that move in and now are waiting, or they're unsure. And then when you get the news, then you get the move. Yeah. So again, fundamentals, you can't use them as a directional bias. They are giving you forward guidance as to what you should be doing in the future. Again, that's why they call them leading indicators. They're known as leading indicators because these are the things that lead price. Yeah. When these things change, price changes. Every indicator on your chart is telling you what has happened. No use. These are as close as you're going to get to a crystal ball. But right now, the crystal ball says everything is that. That's what we're seeing, you know. Or it's that. Squeeze. Anyway, so we'll see what happens. I'm on this week, as usual. I'm going to keep to this schedule for the moment. So mornings on Mondays, Tuesday afternoons, Wednesday morning, Thursday afternoons, and Friday mornings. So tomorrow I'll be on for the New York Open about 2:15. But we've got in the morning the Aussie rate. So we'll have a look at what's happened to the Aussie rate, which should be nothing. But more importantly, the press conference. Have we got any idea of what you're going to do next? And we have got retail sales. So with retail sales, it's sometimes quite impactful when we get big moves on it. Not normally more than much of an ADR if we manage to get that. But if there's been a massive ADR hit on the stock indices tomorrow afternoon, I probably won't trade them because quite often they're exhausted by the time they open. So we'll see what happens tomorrow afternoon. But I'll be back on tomorrow afternoon, 2:15. We'll have a look at what is going on there. And obviously then we're preparing for Wednesday morning, which is the first biggie. Well, after that. I'm not classing this as a biggie because I just don't think it's going to do much. But then again, I thought that of the New Zealand dollar when they didn't change their rates. And boy, did we take off on that. So you never know, do you? But that's the first one really that's of interest this week because that is so close to this. And this, for me, is kind of a 50-50 at the moment. So that number coming out as a red is got a real potential to drop that into a red. If you get a red followed by a red on two leading indicators, kiss it goodbye. I shall be getting out of longs, put it that way. But anyway, we'll see. All right, so that's all for today. Yeah, but a bit bigger. Oh, Harold, you got a real one, have you? Yeah. My profit for the year was spent on a beautiful 250cc scooter last week. Excellent, Franco. Realism. That's what I like. My profit was spent on a 250cc scooter. That's real traders. Yeah, real traders ride around on scooters, not in Lambos. Reality check, like it. FTMO account just before I go. So I'm up 3%. Got floating half at the moment. So yeah, all going well on the FTMO, which is good. Target is 8%. I think. So yeah, I'll keep you updated on that, but all going well so far. All using stops. So we will see what happens. But yeah, I'll be interested to see what happens if I do get funded on that, because obviously we had a look at the terms and conditions, didn't we? And they look very washy to me. We'll see. Right. Anything else you need, I'll be in Telegram or Discord. Other than that, I'll be back tomorrow afternoon. And if you're not around for that, I'll be back on Wednesday morning, same time at 8 o'clock. So have a good day, and I will see you next time.